You know, every so often, a company comes along that just completely divides investors. And right now, Plug Power is one of those companies. I mean, you talk to one person and it's the future of green energy. You talk to another and it's just a giant red flag. So, what is actually going on here?
Yeah, which one is it? Are we looking at a real game changer, a true pioneer in the hydrogen revolution? Or is this just a high-stakes gamble that's built on a mountain of hype? That is the question we are going to unpack today.
And the conflict here is so clear it's almost dizzying. I mean, on one side of the coin, you've got these incredible partnerships with giants like Amazon and Walmart. That's a massive vote of confidence, right? But then you flip that coin over and you see Wall Street analysts predicting, on average, a 31% downside. How do you even square those two things? How can both be true at once?
Okay, so let's start with the exciting part, the dream. Because to really get why people are so hyped about this company, you have to understand the vision, the big, grand story that really makes up the bull case for Plug Power.
So what does Plug Power actually do? Well, at its core, the company builds hydrogen fuel cell systems. The most immediate goal is to swap out old-school batteries, especially in things like forklifts you see in warehouses. But honestly, that's just the tip of the iceberg. Their real ambition? It's way, way bigger. They want to build the entire green hydrogen ecosystem from the ground up.
And they're not just dipping their toes in the water, they are trying to do it all. We're talking the fuel cell engines themselves, that's ProGen, the power systems for stuff like forklifts, GenDrive. They're even building the hydrogen refueling stations with GenFuel, and then they wrap it all up with GenKey, which is basically an all-in-one installation and service package. It's the whole shebang, a completely integrated strategy.
And this is the core of it all. Our mission is to enable a zero-emission economy. That's not just some buzzword-filled mission statement. It's a really powerful story. See, they're not just selling you a piece of hardware. They're selling a vision of a cleaner future. And let me tell you, that is a story that investors absolutely love to buy into.
And it's not just retail investors who are buying into this story. Check out this number, almost 43.5%. So what is that? Well, that's the slice of the company owned by big professional institutions.
Okay, so why does that matter? Well, high institutional ownership is often seen as a sign that the smart money is on board. We're talking about pension funds, huge banks, major investment firms, the big players. When they buy in, it suggests they believe there's a real credible path forward for the company, and that sends a really powerful signal to the rest of the market.
Okay, so that's the dream. That's the big, exciting vision. But now we have to take a deep breath and look at the cold, hard reality. And for every single one of those optimistic points we just talked about, there's a financial number that tells a much, much grimmer story.
And bam, we hit the red ink right away. This number, that's Plug Power's net margin. And to put that in perspective, this means for every dollar of stuff they sell, the company is losing almost $3. It's not just that they're not profitable, they are burning through cash at an absolutely staggering rate.
In fact, the losses are so bad that one of the most basic tools we use to value a company, the PE ratio, or price-to-earnings ratio, is completely useless here. You can't calculate it. Why? Because there are no E, there are no earnings. This makes trying to compare Plug Power to other profitable companies, well, it makes it almost impossible.
All right, now let's look at what the people who should know the company best are doing with their own money. We're talking about the executives, the insiders. Over the last 3 months, how much of their own stock did they buy? Zero. Nothing. But they sold over $17,000 worth. That is a tough signal to just brush aside.
And then you see this number, over 31%. What is that? That's the percentage of the company's available shares that are being shorted. In other words, that represents a massive collective bet by a huge chunk of the market that the stock price is going to go down.
Just so we're all on the same page, short interest is basically when investors bet against a stock. They borrow shares, sell them, and then hope to buy them back cheaper later to make a profit. And let me be clear, a short interest figure over 30% is not just high, it's extremely high. It points to some serious, widespread doubt in the market.
And here's the kicker. It's not just that the number is high, it's that it's growing. The number of people betting against the company just went up by another 2.8%. That tells you this negative feeling isn't going away. If anything, it seems to be getting stronger.
So, okay, we've got this incredible green dream on one side and this really, really tough financial reality on the other.
So how on earth is the rest of the market trying to figure this all out? How are they decoding these signals?
Well, if you look at individual retail investors, they are jumping in with both feet. Just recently, search interest for the stock on MarketBeat shot up over 340%, and the number of people adding it to their watch list? That's up by a massive 482%. It's safe to say that for the retail crowd, the hype is very, very real.
But then you turn to the professional analysts, the Wall Street pros, and it is a completely different story. They're totally split. I mean, look at that. It's almost a perfect three-way tie between buy, hold, and sell. The official consensus rating is a hold, which, on Wall Street is often just a polite way of saying, honestly, we have no clue what's going to happen here.
So here it is, the whole story in one table. It is the perfect financial tug of war. For every awesome bullish signal, like high institutional ownership or that visionary mission, there is an equally powerful bearish signal, like the high short interest and insiders selling their shares. It is a company that is just fundamentally at war with itself.
So after seeing all of that, where does this leave you, the investor? Well, all this contradictory information, all this push and pull, it leads us directly to the heart of the problem, the investor's dilemma.
When you boil it all down, Plug Power is the perfect example of a classic investment conflict. You've got this beautiful, inspiring story about a green future on one side, and on the other, you have financials that are, to be blunt, a total mess right now. So, as an investor, you have to make a choice. Which one of those matters more to you?
And that leaves us with this huge fundamental question that's honestly bigger than just Plug Power. When you're looking at a truly disruptive company, one that's trying to literally change the world, what do you bet on? The incredible power of its story or the cold, hard reality of its stats? That's the dilemma.